You're now tuned in to another episode of Juicy Gems, your go-to podcast for everything related to the world of stocks. Discover new trade ideas, current stock market trends, and option trading tips, exclusive interviews with other successful traders, and so much more. Let's go! Welcome to Juicy Gems. Now with your host, Xavier the Master Trader.
What's going on, and welcome back to another episode of Juicy Gems. I am your host, Xavier, also known as the Master Trader. I'm a former financial advisor and now a 9-year trading veteran, trading mentor, educator, and creator of the Learn, Grow, Profit program. Guys, I got to tell you, I'm overly excited for this one. Today, we have a very special guest here to help you guys bring your trading to the next level in your journey to become an elite level trader. But first, I'd like to introduce my co-host, a good friend of mine, Blake from Trade Tracer.
What's going on, everybody? Xavier, I appreciate that intro. A little bit about myself. Been a trader for over 10 years, former advisor, actually owned my own advisory firm when I lived in Hawaii. Started Trade Tracer to help the retail trader, and since then it's been the best decision that I've made. Been profitable for the past 4 years and running, educating traders around the world on RT, what stands for My Rules to Trade. And my trading philosophy is you have to manage risk at all times, but then you also have to know when to hit that accelerator and hit the gas. You got to get aggressive early in the uptrends. So with that, I want to say thanks for hopping on with us here today. We do have a special guest, Jake from TrendSpider, and we're going to go ahead and get right into this with this disclaimer. Go ahead and take it away, Xavier.
So Juicy Gems and Trade Tracers providing this slideshow and any related materials for educational purposes only. We are not providing legal, accounting, or financial advisory services, and this is not a solicitation or recommendation to buy or sell any stock, options, or other financial instruments. All investing and trading in the securities markets will involve risk, and any decision to place trades in the financial markets is a personal decision that should only be made after thorough research. But as Blake just said, I want to introduce a very good friend of mine. You guys see me tagging him a lot on Twitter, and you guys see me with TrendSpider a lot on Twitter. Actually, it's the primary software that I use. Only software that I use is TrendSpider. And I want to introduce to the podcast Jake from TrendSpider. How you doing, buddy?
Hey, great. Thanks for having me, and really excited to do this interview. And thanks again for all you guys do and sharing the platform and making it your number one software to go to.
Yeah, the platform's amazing. We're going to go ahead and get into that towards the end of this interview. But now that I have you on, let's get right into it. Tell the viewers here a little bit about yourself and how you got into trading, man.
Yeah, so my name is Jake Wujastyk. I'm one of the founders of TrendSpider. I came on right when we went to market on TrendSpider, so I was able to come on and really be a part of the growth of the whole company, and it's been a really cool experience over the last 3 years. So I got into trading when I was about 12 years old, not really out of my own interest. My dad actually said, hey, I want you to try out the stock market, whatever that means. And
good advice.
Yeah, started an account for me, kind of a custodian account. So it was kind of under him, because when you're that young, you can't have your own. So he gave me $1,000 and said, yeah, buy some things that look interesting. This was back in the Scott trade days, so
I remember that.
Wow. Yeah, so I had a little booklet of different stocks that they had, and that was back when they'd send you an actual booklet with like paper. So I had that, bought some stocks, and honestly, those would have been great stocks if I would have held them, but just kind of the way I guess my personality was at that time, being a 12-year-old, having no idea what I'm doing. As I kind of, turned 13, 14, got into 9th grade, one of my friends' dads was trading some penny stock, and I'm like, oh, well, I can buy 1 million shares of that for, whatever, and so that ended up blowing up my first account. And nice. I feel bad for his dad. I think he had quite a bit of money in there, but that's kind of how I got started, and then kind of got a little more serious with it in the 2008-2009 crash, and I at that point I started trading some family accounts. And I still kind of wondering why my mom gave me kind of full autonomy to trade that account at 16 years old, but ended up working out. Made some pretty interesting money through that time going through high school, and then went to college and studied economics, and that's kind of where my passion for supply and demand and really focusing on that in trading came from. So it's been a long journey, and it's really economics focused on my side of things, looking at supply and demand and just where are break-even holders, where are break-even sellers, that type of thing, and that's what I focus on in my trading.
Nice. So I want to say, very similar to me here. I started when I was very young. But my question to you is, since you're so versed, right? Because we all start when we're young. We go from trading style to, go from day trading to swing trading. We as traders, as we're growing and learning, we just jump from style to style till we find our niche, what works out best for you. So over your experience, how would you define yourself right now as a trader? You're a day trader, swing trader, hybrid trader, or just a little bit of everything?
So generally swing to position trader. I'm really not looking at the 15-minute candle too much. I'm generally looking at how is the daily candle forming, and then if I really want to do something a little more intraday, I generally use the 65-minute candle. The reason is because there's 390 minutes in a day. You divided that by 65, you get 6 even candles. So for those that are using the 60-minute candle, you're technically using 6 even candles and 1 half candle. So, the 60-minute candle,
That's
there's nothing
so
wrong
true.
with it. But, it is mathematically not kind of an even number of candles you're looking at. So I like to use the 65-minute on entries. And then really for my thesis, I generally am looking at the daily, the weekly, and the monthly. So it's nice that we just got fresh new monthly candles yesterday. So, generally I'm looking at the longer term, 2 to 4 weeks. And early on, I was just like, oh, I'll buy this and I'll hold on to it forever. And generally they weren't, good stocks. They were biotech stocks that, 2 weeks later they get a FDA denial, or they get some type of delay in the process. And so, my style's definitely changed from, trading biotech back in the day to trading more growth names. But honestly, I'll trade anything that, that has a setup. But I do like to, stock, the stocks before I trade them. I'm not going to just go jump into something I haven't been watching for probably at least a month. So there is a little bit of a process there, kind of seeing how it plays out, seeing the volatility intraday, looking at the spread. The worst thing is buying something and then, you go and market, because I generally am market buying. If I want something and I want to buy it, it's going to be a market buy. So you don't want to go buy something where you just bought the ask at a 2 or 3% spread. So that's definitely something I like to kind of look at before I jump into something.
And are you primarily doing this with shares, or are you doing this with options?
Shares mostly.
Okay, pretty cool. Now, you two said it really stood out to me, and I've noticed this a lot with the TrendSpider team, the 65-minute candles for the mathematically correct amount of candles. That's perfect. Now, my next question to you is, since you're looking at those higher time frames, those longer term candles, what is your average hold time, and what type of markets do you actually target?
So generally, mostly just equities. The stock market, growth stocks. Back in the summer months of 2020, I was definitely trading oil, trading airlines. So that silver had an amazing run there from 15 to 25. So that was a fun trade. So it's not something that I generally am too strict on. I won't trade this, I won't trade that. Other than cryptocurrency, I know cryptocurrency is a huge market. People love it. I personally enjoy my mental health being good. When I trade crypto, I've tried it.
You don't
twice.
like those 20% whipsaws, Jake?
Sorry.
I said you don't like those 20% pullbacks?
Well, it's not that. It's the fact that, when I am so kind of into the market and so just dialed in. I can't be dialed in 24/7, right? Like, when the market closes, I'm able to kind of relax. If the market's open, I kind of have this, thing in the back of my head that, okay, the market's open. Even like when I wake up in the morning, I can't sleep past the market open on a weekday because my brain is so used to, the market hours. So, when crypto's trading on a Friday night and, I'm out, doing something and at dinner or, just hanging out with friends, I don't have to deal with Bitcoin even if it's up 10%, that's great. But, I do like to have my breaks. Right. And, there is that hodl type of approach, just hold it. So I did do that. Right. Now, when we bought our house, we were going to get a home equity line of credit that had some weird kind of payments that you had to do. I'm like, well, I'm definitely not getting that. So I had about 425 Litecoin at like $64 a share. And I sold it for some renovations on our house. So that kind of sucks because, that would have been a solid gainer.
I made the same mistake.
I probably would have just held on to that. I do trade family money too. And I called my dad when Ethereum was at 250. And I said, let's get in. And he just said, I don't understand it, so I'm not going to get in. So I'm like, all right, well, whatever, we'll buy something else. But the crypto is just something that I personally just don't trade. Maybe when things settle down, we're about to have a baby, I just don't, that's the last thing I want to deal with. So it's not that I don't like the crypto markets. They just, they're just the constant 24-hour markets is just something that isn't what I would call, great for the way I look at the markets. I'm just too dialed in to do that 24/7.
So I think what I'm hearing from you, bro, is that, you're really specific to your type of trading style. And that's something that I think is really important. People need to figure out what fits them, which is one of the first trades, Xavier asked you is, how do you trade? I think one of the things that stands out to me is your patience. So that's one thing that I try to, really, get inside of, my members' head is patience is such a key aspect of being a profitable trader and being consistent. And just your process of, stalking your entry before you're getting into a trade and, really looking at, your economics background with your supply and demand zones. I mean, these are things that, from what I'm reading, fit your personality, fit your, investment time horizon and risk profile and what you're looking to get out of the market. A lot of people are successful day traders and, there's a type of game to play in this market for everybody. And it's really important to really hone in on, what suits you. So if any listeners out there, Jake's dropping some gems here. You got to figure out what is, really symbiotic with your mental model and how you want to approach these markets.
Exactly. Yeah. Each stock has its own personality. Crypto has its own personality. If you're somebody that, can't deal with a 5% drawdown, then you probably don't want to go trade growth names, because you're going to get stopped out every single day. So it's just really kind of tying your personality with the personality of whatever you're trading. And, that sounds weird, but stocks, crypto, all of these things have a personality and you just have to find what meshes with yours.
And one thing I wanted to say, well, let me just start off saying congratulations on the baby.
Thank you.
I hope everything goes well with that.
Appreciate it.
100%, yeah. And one thing that I want to point out with this, if you guys are traders and if you guys are experienced traders and you have a workable system, you should stick to that system. Anytime you step outside of that system, for example, if you're an options trader and you're an option swing trader and you step outside that system to jump into crypto, what you're doing is insulting your trading system. You're entering an unknown realm of stuff that you've never done before. So therefore, that ability to apply consistency and repetition is gone. You're hopping in something that you have never did. So what I do is what I've done with crypto, I've bought with profits some crypto. I got some Bitcoin at a lower price, I have some Ethereum at a lower price, and that's pretty much it. And I've just held on to it. And I'm okay with missing opportunities but I'm not okay with losing money from me entering the unknown. And you guys should really take these concepts that they just talked about and just really apply that to your trading. And this just leads me to my next segment here, to both of you guys. What advice would you guys give to any new trader that is looking to become a trader, or anybody that's struggling with their swing trades as well? Because Jake, you've pretty much said that you are positioned in swing trader as well.
Yeah, I mean, I think you just made a good point. I think one advice I would say is stick to what you know. You know, one of the analogies that I talk about a lot on my personal Twitter is, you know, you're not going to go into a casino and go play blackjack all night and then go play, Texas Hold'em if you have no idea how to play Texas Hold'em. You know, you stick to what you know. It's just makes no sense to just go, chase what's hot. It makes sense if you can apply that process to, what's hot, but goes back to the personality. You may not be familiar with, whatever's hot. MVIS, for example, was a ripper last week. And, if you haven't been following that stock and you don't know how it moves, then, it's like playing blackjack your whole life. And then, one night you're like, well, I'm going to go play Texas Hold'em because, that works great. That really transfers over. So really sticking to what you know, not going on social media and saying, oh, this person said their strategy works, so I'm just going to blindly do that or blindly follow. That's something I see a lot. People enter the markets, they find somebody to follow, and then they don't do their own due diligence, and they don't even have a process. And then these people start asking, well, are you still in? Are you out? It's like, well, what I'm doing doesn't matter. It's kind of what are you doing? And so it's what I'm doing and what you're doing. Maybe my risk tolerance is higher. Maybe I have a longer time horizon. So, sticking to your process and not comparing yourself to other people is probably one of my biggest advices. Just, stick to you. Don't worry about what other people are doing. And I think that kind of goes with life in general, but definitely in trading as well. Just, find your process and stick to it. What works for you may not work for somebody else.
No, absolutely. Yeah. I just want to build on that. One of the things that, I would say is that there's no shortcut. This is, I look at, trading as a journey, and, a lot of people, like you said, Jake, join services and are just looking for an alert service and somebody that they can, try to, do ditto trades. And we all know that doesn't work. That's not developing you as a trader. There's no shortcut in life. So if you want to actually dive into the markets and be successful, it's going to take a little bit of effort on your part. You got to understand, you're playing against the best traders in the world. Everybody's looking at the same bids and asks as you are. So when you step onto that field, you're playing against LeBron James, you're playing against Tom Brady, you're playing against Patrick Mahomes. Yep. So, I always give the analogy, if you want to win, which in my book is having a winning trade, if you want to win against these guys, you're going to have to put in a little bit of effort and a little bit of work to find out what fits you and develop your own edge. So that's what I like to say is there's really no shortcut.
Yeah, and it's sorry, I didn't mean to interrupt you, but back to that analogy of blackjack, right? If you go play blackjack and somebody's standing behind you and they're telling you when to hold and when to hit, and then all of a sudden they leave and go get a drink at the bar, you have to still know when to hold and hit. If you just are waiting on them telling you what to do, you're going to be sitting there having no idea what you're doing. So you do have to, have a little bit of just a passion for what you're doing in trading, and it not just blindly following and just letting someone else do all the work.
You need to have some type of system. And I wanted to just tag in what I was saying with Blake. Blake's saying there's no shortcut to success. I like to say there's no elevator to success. You have to take the stairs, trade by trade, lesson by lesson, and that's how you build a profitable system. You can't get rich just following somebody's alerts off blind, just blind trades. You won't know what to do. You won't know how to get in it, right? I run a chat room. I run a service too as well. And part of what I do is I do call out the trades that I take live. And I like to educate my members on how I make these decisions. Now, if you don't understand how I make these decisions, if I call out a trade, you're going to look at the trade and say, hey, if I say, hey, I'm getting long Apple right now, 33 calls, I'm going long, blah, blah, blah. You're going to look at the chart. As I've called this out, I'm already in the trade. You're going to look at the chart and say to yourself, I kind of like the trade. Let me get in. All right. So then you're going to pull up the options contract, find the strike, hit the order button, hit the entry, hit the send. And at the same time, this contract's moved 20, 30 cents. right? So it's better for you to learn some type of system that's based on some type of setups that you can implement yourself. Don't mind what people are doing, okay? So my question to you, Jake, is would you mind sharing at least one or two of your favorite setups that you trade, or your top two, basically?
Technical setups?
Well, whatever you do. Like if it's a fundamental, technical, two of your top triggers for you to get in.
Yeah, so generally it's really based on supply and demand. I don't know if I can share my screen, but the main things that I focus on are volume by price, anchored VWAP, and kind of a solid candle. So, a candle that I use hollow candles, so I definitely want to see a green close, but I also want to see a hollow candle. So, for those that aren't familiar with hollow candles versus regular candles, there are some slight discrepancies. I need to see the candle close above the previous close, so that means it's going to be green, but the close of that candle also needs to be higher than the open, which makes it hollow. So I personally am really focusing on that on the candle side of things, as well as just the what I call like a volume shelf. Can I share my screen, or?
Yeah, of course. There's a little button at the bottom.
Yep.
You should be able to share. How about this? I'll stop sharing. There you go.
So,
Jake, and do you just want to also explain, I know probably more experienced traders understand, but for people who are new, why you look for that hollow candle, just, for the price structure?
yeah, so the main reason is just showing that, not only is the time frame higher than the previous time frame, but it's showing that for that time frame that's closing now, you still have buyers in control from the open. So if you're looking at my chart now, let me just add the volume by price. So you'll see the hollow candle has really four different ways to set up. You've got solid red, you've got a hollow white, and the reason why it's white is just because my background's white. If I had an orange chart, it'd be a hollow orange candle. And then you have this gray, and then you've got a hollow red candle. So the solid gray here means that we closed higher than this previous close. So you can see on December 20th, we closed right up here around 24.55. And then the next month, we closed up here at around 25. Now, we opened up here. So the analogy I like to use is like opening or closing a window shade, right? So like if you have your open up here, and you're closing the window shade, and your close is below that, you're kind of closing that shade. So anytime that you're closing higher than the previous candle, it's always going to be this gray color. But if you close lower than what you opened at, it's going to be solid, and that means that you don't have that control, the buyers in control from the open. So, for me, I personally want to see a hollow candle because buyers are in control from the previous period and from the open of that candle. So that's kind of my take on hollow candles, and I just you can get a lot more information on hollow candles quickly. So that's, for example, if we looked at the regular candle right here, this would be red. So let's just change it real quick to the regular candle. This would be red. So these color candles are a function of the open versus the close. So if your close is lower than your open, this is going to be red, but it still closed higher than this previous close. So why, to me, I'm like, why is it red? So using the hollow candle, I can just get that information a lot quicker, especially when you have a candle that's like, pretty close to the other one. You're like, is that red? Is it not? The solid gray tells me that we did close higher, but we did close below the open. So, that's kind of my philosophy on the hollow candles. And then using the anchored volume by price. So you anchor the volume by price. What that means is you're measuring from a specific point in time, where are shares holding at what price point. So everyone's familiar with volume at the bottom of the chart on the x-axis here. This is volume as a function of time. You're looking at how many shares were traded within 1 month, because we're on the monthly chart. Volume by price is measuring since this bottom to this high, because we're starting it here, how many shares are holding at different levels. So you can see here a majority of shares have transacted and bought. And all these, there's always a buyer and a seller, but most of these shares have kind of aggregated right around this area, which creates a base for price. And generally, especially when you have the VWAP, the volume weighted average price, around this same area, this volume shelf that I'm calling it, which is pretty much the point of control. Point of control is just the biggest volume bar here. So that means this area from around 23 all the way up to around 23.30, that's where a majority of shares are holding. And then you can see there's these volume nodes around it, which kind of creates the shelf. So being able to anchor from a capitulation point, like the COVID lows, this is when the market reset. So I want to know, since the market reset, since everybody got flushed out, everybody capitulated, where are these shares holding now? Because if you, let's say that you're looking at from September of 2019, someone that bought here likely capitulated here, and it's no longer part of the, the volume. So I want to know, since capitulation, where is this volume holding? Where's the volume weighted average price? This is something Brian Shannon teaches. I'm kind of a student of Brian in the anchoring process.
Yeah, he's
and
really
that's how he teaches it. And so, I just applied the volume by price with the anchored VWAP. So my favorite setup is having this anchored VWAP and then having something like this where you've got the volume shelf supporting it as well. So it's those are some of my favorite. Now, if we go to something like Snowflake.
Which, if you guys are, listening and not viewing, what Jake is essentially pointing out is what he talked about earlier, is the supply and demand zone. So just visually representing it, with the TrendSpider software, which I know Xavier uses it, and it's my primary software as well. And we'll have a link for you guys at the end of all of this to check it out. But really, really powerful tools, and fits Jake's personality and his trading style perfectly.
Yeah, man, it's one of those things that everyone's got their own style, and that's, as I mentioned, just because I use this, it may not work for somebody else. And the thing is let's say that you use this once or twice and you got burned once or twice. You have this psychological barrier now. You're like, well, yeah, it works for him, but I got destroyed on these two trades. So you have to do what works for you. And I've seen a lot of people, jump back and forth between strategies because, they get burned once or twice, but everyone gets burned. That's part of trading. You have a win rate and a loss rate. You're always going to lose. It's just how you manage your risk. It's your position sizing. There's nothing wrong with going too heavy in a position, but you really need to have a very tight stop loss and know exactly what you're risking on that trade. And the risk is not the whole position. The risk is, what's my percent loss? And I think a lot of people forget that. It's like, what am I risking? You're not risking the position that you're in. You're risking, a 5% part of that position. If you go in 100K in a position, you're not risking 100K unless you're in like a weekly option that expires tomorrow. You're risking whatever your stop loss is. And so a lot of people just hold on to stuff, especially options. It's like, oh my gosh. And that's something that I made mistakes on, and I still make mistakes. Now, there are some accounts where I'm a little more flexible, and I'm like, whatever. It's part of a bigger account, But I know a lot of people that let trades expire. If it's not a big part of their portfolio, they just take the loss and they know their risk and they move on. So this is another kind of subset of what I just went over. This is a volume shelf kind of at the bottom of a downtrend, and the difference here is this volume gap above. The ability to see a lack of liquidity above tells you that there's not a lot of shares holding above. So let's say that you got into Snowflake at 296, right? And then Snowflake goes all the way down to 200. You're dealing with a 30% drawdown on your position. So as the price gets back up to 295 or 300, you're probably going to take some off the table. So these volume gaps represent an area where there's just not a lot of shares holding above, and you don't have that friction. So I look for these volume gaps. They kind of act as a vacuum almost for price. So Apple was a good example of this on the weekly candle. And these things are fractal, right? It's not something that just works on one time frame. This works on pretty much any time frame. So what I like to do, same thing. This was a couple weeks ago, maybe a month ago. I started the volume by price from the swing high. We had the same exact setup that we're looking at on Snowflake right now, except we're on the one day chart. You can see here, same thing. We have this volume shelf. Same thing here. You've got this volume gap. Price was able to move up very quickly through this area because there were no shares holding there. There was nobody back to break even getting out until you got back to around 135. And what happened at 135? The price could not get through the supply. So being able to see supply and demand zones visually using the anchored volume by price is probably one of the most powerful things I've ever used in my trading. And that's really what I focus on, these volume gaps above. And this was just a really good example of that.
For the record, are these volume by price? This is only and exclusively available through TrendSpider, correct?
So, volume by price, volume profile is something that's pretty, common on different platforms, but the ease of use and the ability to easily move your anchor point
The anchor point is the key differentiator.
Is only on TrendSpider. A lot of, let's say that you go on, TD Ameritrade or something like that. TD Ameritrade, like Thinkorswim has this, except their volume bars are sticking out the other way. I want to see price interacting with these bars, not, the opposite direction, sticking out to the right and not towards price. So there are other platforms that have this type of concept, but ours, I would say, is definitely the easiest to use. Just simply moving this, right? Okay, if I want to look at the volume since this capitulation point on March 8th, I move the line and it automatically pops up. And sometimes you'll see that, from the swing high or the swing low, you can have a very similar volume profile. So, let's say that I anchor this maybe from the September lows. You'll see that, it changes a little bit, but you can still see a majority of shares we're holding here created a base for price, and a majority of shares we're holding here, which created a supply zone. So, it's very fractal. You can use this on any time frame, and it is something that is on other platforms. But the ease of use, the user experience, and just the interface of easily just moving this is what is proprietary on TrendSpider.
Nice, man. My next question for you is that, since you're a longer term trader, you would say yourself as a longer term trader because you're talking about positioning and swinging. When you say position size, you mean to the farther time out. Mm-hmm. What time frame can you not live without, and why not? Like, if you had to choose one time frame, if your chart was broken, let's just say your computer froze for let's just say it's completely messed up, and you can only trade off one time frame, what would it be?
I would say the weekly.
Weekly? How about you, Jake? How about you, Blake?
For me, I'm more of an intermediate swing trader, so for me, it's the daily. But I definitely look at the weekly for my position trades. So like my investment accounts, I'm looking at the weekly.
Okay. And my next question for you, Jake, is since you're going so far out, if you're going to take options, how far do you buy out? Are you buying leaps? Are you buying 6 months out, 3 months out? What are you doing?
Yeah, so with an options contract, I generally do not buy anything less than a month. I mean, it's something that gives you time. I mean, weekly options, yeah, they're fun. But once you've had a couple expire worthless, it's like, this isn't so fun. So I generally like to look out at least a month. I'm definitely not buying leaps though. So for example, I got into a GE trade in mid-March, and I bought the May 21st. I bought like the $15 calls. They're pretty much going to expire worthless, but it was a very small position relative to the account size, and so generally at least a month. I've even started going out even 2 months because it's good to have confidence in a trade, but there is margin of error around charts, right? You're sometimes going to have a little bit of noise in the chart, and if you buy less than a month, you really have to be right on the money, or you're just going to get destroyed on the theta burn. You're going to get destroyed. Let's say that you buy something high implied volatility, and then the implied volatility crashes. The stock could go up 10%, and just because you bought at such a high implied volatility point, you may not even be up on the trade. So those are all things that I consider when trading the option side of things.
And honestly, this is so interesting to hear because primarily I'm on the opposite side of you. I'm more of a day trader, and I am involved a lot of times through weekly. And I like to say it's all about risk management in your particular strategy. So like Jake said, certain things are going to work for certain people. Certain things are going to work for other people. So for Jake, a lot of what he's doing is these longer term positions. As for me, I do them here and there. However, I'm primarily in and out on scalps. And what I risk and what I like to apply is a 10% stop rule when I'm in the trade, when I'm on a weekly contract. So if I'm down 10% at all, I'm out. So it doesn't matter what, how much I have in the trade. I'm only risking, as Jake said before, what are you risking? That distance between the stop loss. But a big difference between what I do on the day trading side versus what you do is fundamentals. Now, me personally, fundamentals, I don't really care when I'm looking at the market for a day trading point of view, because I'm going to be in and out today, right? But for you, what sort of impact does fundamentals have on your overall trading? Are you even looking at that, or is that a prime decision maker for you?
No, not really. I mean, the only thing I'm going to really look at is the overall broad market strength. So, if let's say, I get into something that is, has a pretty close beta to 1, which means it moves right with the market. I'm definitely going to keep that into consideration. Hey, I'm getting into something that moves with the market, and the monthly candle looks horrible on SPY. That's something I'm definitely considering. But for the most part, from a non-technical view, I'm really looking at like seasonality. So I was really bearish on the markets in mid-March. And then I started looking at seasonality, and on TrendSpider we have a seasonality tool that
Love
I
it.
can share real quick. It's probably the most powerful non-technical tool that I use. So, for example,
Yeah, I've seen you posting a lot of the seasonality stuff, Jake.
On his Twitter,
it's
yeah.
been pretty good stuff.
thanks. Yeah, no, it's something. When we first got it, I'm like, what the hell is this? And then I started using it, and I'm like, holy crap, this like completely changed my my trading. So SPY is a good example of this. So we had this longer term breakout on the monthly back in March. So not only were we breaking out of this longer term resistance line, but if you go to seasonality, you'll see that over the last 5 years, let me just pull this up. You just go to the widget, seasonality. So you can look at the monthly, weekly, daily, or hourly. So we just go to monthly, and I want to look back since 2016. There's a couple reasons for 2016. One, this is when we bottomed out. Pretty much we had a 2-year kind of just chop fest here. So 2016, the beginning of 2016 was really when we pivoted here for the next leg up. And people will ask, well, why didn't you do it since COVID lows? Well, it's only been a year, right? I can't look at the seasonality of a month to month if I only have one data point. So I'm looking back since 2016. And if you look back since 2016, you'll see April has a 100% win rate. So not only were we breaking out of this longer term trend, but I was looking at the seasonality and saying, well, April's a pretty damn strong month. On top of this technical breakout, I'm definitely back to being bullish. And so seasonality is something I use a lot, but fundamentals, I mean, it was worth noting that the 10-year was rising in February and March, and that definitely hit growth names because growth names thrive off cheap money. But for the most part, I'm not really looking at fundamentals other than, seasonality, if you want to call that fundamental.
And to most people, that sounds shocking because, like, when I tell people straight up, I look at news, but it really does not affect my trading in any particular way. I'm more focused on what is that chart doing, and I've recently implemented in my trading the seasonality tool that Jake was just going over. Dan came through and showed my team basically a couple things on TrendSpider, and ever since then, that seasonality thing has been.
Yeah, and everything is going to be reflected in price. So all news, all risks, all known, all unknowns, all of that is reflected in price structure. So same here. I don't really look at fundamentals because I believe that the fundamentals are baked into the price.
Exactly. One of my favorite things people say, I look at a chart and let's say, oh man, this is really setting up technically, and it goes up. They're like, oh, well, that's because the news came out. It's like, well, the price was able to move up because the supply and demand were in a spot that allowed the price to move from news. So one of my favorite analogies to use, and this is such a nerdy analogy, but like think of a volcano, right? Think of Yellowstone, which is a super volcano. Yellowstone has earthquakes all the time, and it's not causing an eruption at Yellowstone because the underlying variables underneath, Yellowstone are not ready to erupt yet. I guarantee as soon as Yellowstone erupts, an earthquake is going to cause that eruption, But that earthquake is going to cause that eruption when the underlying variables beneath Yellowstone are ready to explode. So, think of the news event as the earthquake, right? And think of the underlying gas and pressure and all that under a volcano as the supply and demand for a stock. So, news events come out all the time. It's when those underlying supply and demand variables are in place is when news events can move a stock.
Jake, you're talking to a former geologist, man. I just got a little excited about that analogy there.
I never knew that about you. That's pretty cool. Now, guys, when you guys are getting into a trade, because this is where I wanted to ask both you guys and for the audience here, because swinging is a little different than day trading, right? There's a fine line when it comes to risk management. Now, when you guys are getting in these trades, are you guys using a fixed percentage for your loss, or are you implying some type of structural system that says, hey, I'm down too much right now, I'm going to get out of this trade? So what exactly are you doing to minimize your risk or minimize your losses on these swings?
Yeah, for me, it's definitely not a fixed percentage, and the reason is because going back to each stock has its own personality. If I go trade something that has 5% swings, I'm not going to stop out on a 5% move down if that's normal, right? So you almost have to look at the ATR on whatever stock you're trading, so the average true range, and get an idea of is this outside of how it generally moves. Generally, if I'm stopping out, I'm looking at a previous low to stop out at. And in some stocks that may be 5%, some stocks that may be 8%, some stocks that may be 2%. So it really just depends on whatever chart that I'm looking at and what personality of the stock that I'm trading.
No, same here. So if I'm trading common, like my investment account, very similar to you, Jake, I'm looking at a previous low as a stop out point. But if I'm trading options, which is typically what I'm doing 90% of the time, and short-term swing trading, I'll typically dedicate about 10% of my portfolio to any given trade, and then of that 10% that I put on, I'm willing to risk roughly 30% of that. So anything below 30% gets to be extremely difficult to make back up. So really 25 is kind of that cutoff point, but once we start hitting 30, if I'm in an options contract, I'll typically cut it because I know I can get back in. And making back that 30%, I got to make back much more than that 30% to get back to even break even. So different strategies, two different philosophies.
Yeah, and again, that's why I love having both of y'all on here. Now, I got a question for both of y'all, right? And this is legitimately for both of y'all. We all take losses, right? And honestly, in our trading careers, we've all blown account. I've blown 4. Jake said when he was younger, he blew 1.
I've blown more than 1.
Yeah, I think we all have,
right? So what's your largest lesson from doing all this? And what did you stop doing? Like, what did you do to blow that account? What did you stop doing so that it didn't happen anymore?
I would say, putting your ego aside and saying, I'm wrong, right? I think that's the biggest thing. People are like, oh, I'm just going to hold on to this one, especially
diamond hands.
It's like, diamond hands, right? Yeah, that doesn't always work. Diamond hands honestly can work. I mean, if you have diamond hands with, crypto, then it works pretty damn well. But, if you're trading options, if you're trading, like I said, a biotech stock, you really have to look at the overall company. Are they diluting? Go back 5 years and see if you see a company that constantly is hitting new lows, and let's say the company used to be at $1,000, now it's at $2. That is likely because they keep diluting. The biggest fallacy that people have in the market is, especially someone that comes in new is, oh, this stock used to be at $1,000, now it's at $2.
Yep.
I can be rich. And then you don't realize, at $1,000 the market cap was 20 million, and now at $2 the market cap's at 80 million, right? So if it goes back to $1,000, you're gonna have like a $20 billion company, and it just doesn't work like that. So always look and see, how often does this company dilute? If you're going long in a company that constantly dilutes their shareholders, you're in a just in a sand trap that just quicksand type of thing. You're gonna go down quick.
Yeah, man. So how long altogether have you been trading?
Me?
Yeah.
So I'm 28 now. So when I was 12, 13, I wouldn't call myself a trader. I bought some stocks. I definitely was watching the markets pretty often, but I would say pretty much my trading really started in 2008, 2009 when the market crashed. So I would say about 15 years.
And out of that 15 years, how long have you been involved with TrendSpider?
The last 3.
Okay. And when you started with TrendSpider, did you ever think it would be as big as it is today?
I definitely had a vision and a goal, and I saw Dan's vision and his goals, and I don't want to say that I didn't think it would be as big as it is today.
You have to believe
you
it.
have to, right? If you don't think that it's going to be big, you're never going to have that next push to get to the next level. So I did think it would be big, and that was my goal, and that's why I came on as a founding member, because I believed in what Dan and Russ were doing, and wanted to be part of something bigger, right? Not just because I did have a subscription service before this, and it was great. But it's really easy for people to blame you for stuff, especially when you've never met these people, you've never even talked to them on the phone, and all of a sudden they say, I just lost 20 grand because of your chart. And I'm like, well, whose fault is that? That's not my fault. I didn't help that.
I didn't press those buttons.
So being on the TrendSpider side, the software side of things, being able to provide a tool to somebody that they can make their own is what I prefer to do, and really evangelize the product and show and educate people different perspectives and new ways to look at the market.
One thing I want to point out is
great,
that
man.
TrendSpider listens to traders. Okay, they literally will. I believe you guys have like an inbox where I can give you an idea for a indicator or some type of trading thing that I use in my trading to give back to you, and that's something for me that really separates you. All these in-depth proprietary tools. Honestly, I'm gonna be on the record to say it. If you guys had an ability to put money into TrendSpider and trade with it, I would probably move my whole trading account and just trade out of TrendSpider. That's just me being honest with you guys.
And I think one of the things also that sets TrendSpider apart, and why they're willing to listen to people that are on their platform is because they're not just developers. I think everybody that works on their team is some sort of a trader or is involved in the market in some way. So I think that's pretty cool as well.
Yeah, that's really, if you go to other platforms, a lot of these, some of these platforms, not all of them, there's a lot of platforms that do have traders that, give input. But, I think just the fact that being open-minded, right? If we just had a vacuum and we were only building what we wanted to build, then we wouldn't be where we are today. I think a big reason where we are today is because we listen to our customers and, okay, we've heard this request 50 times. Maybe it's time we put this on the platform, right? Instead of just being so, closed-minded, we're open to hearing feedback. We love negative feedback because that's going to make the product better. Sure, it's great to hear positive feedback. We always appreciate it, and, it's a really motivating thing, but we don't want to just hear what's good about the product, because then we're going to get complacent. We want to know what we can fix and what we can do better, and that's what's going to continue to evolve the product over time.
Yeah.
No, that's having the right mentality. That's putting the ego aside and having the right mentality and wanting to improve and understanding that, hey, people that are using this platform every single day, they are going to be the best people to tell us what we can improve upon, right?
Yep.
So definitely the right approach there, man. I really respect you guys a lot and respect what you're doing for the trading and FinTwit community. It's really awesome.
Hey, thank you guys so much and your support. It means a lot.
And because we're approaching time, I just had my alarm go off because we're approaching time. Just without the visual detail, because the visual detail is going to run you over time. What stocks are you watching coming into this month?
So I like Snowflake. Let me share my screen and I can go over kind of the visual side of this real quick. So I like Snowflake.
Jake, one of the things that I've noticed about your trading, man, is myself and I know Xavier too, we're more, momentum breakout type of traders. And one of the things that I've noticed in your style and, going back to trading your personality and, what fits your mental philosophy, is that I noticed that you buy a lot of the pullback trades, a lot of the pullback, setups.
Yep.
So is that because you're wanting to get a good entry and defining your risk? So if you're getting in, you're getting in close to where you would be wrong?
Yeah, and I think it's just because I'm a cheap mofo, honestly. I don't want to buy something that's
a good one.
No, I think it's a mix of just, what I've done in the past. Now I do, for example, Snowflake, right? It's not something I'm in right now. Snowflake is one of those things where if you look at the daily, and this is where I do use the daily, right? I wouldn't enter this trade until we really broke through, this 242, 243, and I would have to see some volume backing it. So I do like to look at, the longer term setups here. But if I'm going to enter, I need to see a breakout. The anchored view app here, the volume weighted average price from this swing high, I need to see it break that. So there are parts of my style that are still looking for that momentum break. But yeah, on the longer term side of things, it generally is a pullback. I loved airlines back in May and June.
Well, that was a good trade,
that was
man.
Probably one of my better trades.
Yeah.
Last
I got
year.
into financials, so I can't fault you for that.
MRO was a really fun trade. This is on the session candle. Let me go to the weekly. So yeah, MRO was one that I absolutely loved here. Traded this one from around 4. Somehow I got lucky as hell and sold at 839 here, some ridiculous thing. Bought back at like 529, and then I sold around 850 or something. So, I am still
biggest things here is I can point out is discipline.
Yeah, if you're just, and that's what TrendSpider does too. If you have an alert, and you've got these things that let you apply a process, then you're just going with the process. If you're just going in and randomly saying, "Oh, I'm buying this because my 2 best friends bought it," that is not a strategy. That is a losing strategy. So just having a process and knowing what you're trading, right? I used to trade MRO back in the 14s before it crashed. So, I'm trading stuff that I know. Anything that's this oversold, it's hard for me not to at least jump in. And it goes back to the candles, right? We had this huge drop. We have a gap above. We had this nice weekly candle forming here. And so I got in on this candle here, on this kind of move up, and then I just held, all the way up. So there is that pullback mentality of my trades, but there's also waiting for that momentum to come back in and that strength to come back in a lot of the time. But on longer term stuff, for example, Fubo, I don't mind, getting in a little early. I got in Fubo. I've been scaling in Fubo since the 30s. I bought some more at like 21. That's one that if it does break down, whatever, but over the longer term, I just think this is going to be a really strong company. So streaming services are not going anywhere. The thing I like about Fubo is the fact that they do a lot of soccer stuff. The U.S. isn't really that heavily focused on soccer, so it just tells me that, hey, this could be an international thing more than just domestic. So, Fubo's one that I liked the breakout, not the best weekly, but if you go to the monthly, I do like this kind of little kind of pullback here. If we fib it up, I think we're like right at the 50%, a little lower than that. It depends on what scale you're on, but yeah, something like this, definitely there's risk buying kind of the dip, but it's one of those things that, it's really just a mix of buying something cheaper than I know what it was, buying something at a 50% discount, and just still believing in, the product. Now, Fubo is one of those ones that I think there's still too many people in. Same thing with PLTR. There's just too many people that think they're going to get rich, off of this, and any stocks like that, you generally have to stop those people out before it can move up. So that's kind of what I'm liking. I'm liking Snowflake. I'm liking Smile Direct. I'm liking Unity Software. Those types of setups. Silver SLV looks good. The one that I went over earlier with that volume shelf and anchored view app. So those are the ones I'm definitely keeping an eye on into the month ahead.
Great, and thank you for sharing this with me. We're going to note that on the tweets about this podcast when we get them out. Now, we are approaching our time. I just want to go ahead and just say again and express my thanks. I do appreciate Jake for coming on. Jake, what's your Twitter handle so people that are listening can follow you?
At TrendSpider_J. So
all right.
TrendSpider_J is where you can find me on Twitter.
Jake, and one thing I want to put out in the air, there's a fake Trend Spider out there. Please block and report that Trend Spider account. Let's get that account down. What's the website for Trend Spider?
Just trendspider.com.
Perfect. And Blake, read your information. Let everybody know where to follow you.
Yeah, you can find me at Twitter at Trade Tracer, website tradetracer.io. Any questions? Blake at tradetracer.io.
And don't forget to email Blake about his playbook. You need the playbook. Hit Blake up. And again, be sure to follow me on Twitter. Stock Twist is all the same. Real Juicy Trades. Website's at juicytrades.org. And the email is juicytrades at gmail.com. I want to thank both you guys for coming. But we're going to go ahead and end the podcast here. And we are out. Have a good one, everybody.
Thanks for tuning into this episode of Juicy Gems. Make sure to subscribe so you don't miss out on any future episodes. Also, visit juicytrades.org and join the trading community for live training videos, trade alters, or start training with the Learn, Grow, Profit Trader training program. That's juicytrades.org.